Okay, guys, how you guys doing? Hope you're doing well. So yeah, we're gonna talk about the stock market today, and here is actually what I was looking at. I'm looking at two popular stock, which are the Tesla stock and also the Apple stock. So also I'm gonna discuss about the wyckoff schematic. So if you guys know about the wyckoff schematic, you can like study them and you get to know how you're gonna invest in a particular stock market. So yeah, this is for my investments and how you can study the chart and know when to invest your money on a particular stock, and also you know reduce the risks of risking your money. Yeah, the risks of having losses in the stock, a particular asset you choose to invest on. So yeah, so here is the Tesla stock. Tesla stock. So what I'm actually looking at here, I'm actually seeing a kind of like a Wyckoff schematic right over here. So what am I looking at? First of all, we do know that Tesla has been bullish for a while, right? We do know that the Tesla market has been bullish for quite a long time, right? So what really happened here? Right here, we see the market consolidating price, right? Even also here, you can see how it curves away, right? So we have a consolidation at this area right here, right? There was 218, the year 218. So it distributed the price downwards, right? Distributed the price downwards. And what is below price right here? We have area of support. We have liquidity resting right here that it needs to grab. And what is below that liquidity? We have area of demand right here, right? Because we have imbalance. We have an imbalance that was left behind. Then we see it break that structural high right here, grabbing liquidity, right? Grabbing liquidity. So if you know you like invest in a Tesla that year 218, and you invested based on you're looking at your charts, you study your chart, and you know the right time to invest and the right time to wait, right? Including the economics, involved. Same thing happened here. You see high, low, high, high, higher, low, right there in the area of what? Area of demand, right there. So these are times you sit down and wait for price to come to your area of interest before you think of investing. What sort of amount you wish to invest on the market? You cannot just like based on the stock is popular. You're like, I'm gonna buy. You don't even check your chart. You know if it's at this area. You went ahead. Maybe you bought $500. You bought, I don't know, and you see your losses right over there. Trades down right over there. Now, the key of being a trader, the number one thing you need to know about trading is that you have patience. You wait for price to get your point of interest. Right here, I can see that is also this is a distributing price, right? We have PSY right here. We have the buying climbers right here, right? We have the buying climbers right here. We have also right here we have the AR right here, right? It's not every consolidation you see you like call that what is it called? The wyckoff schematic, right? You have to see a clean range, gaps behind imbalances. You understand? Imbalances in every area, right? So um here again we have our ST right here. You understand? Anybody can see wyckoff. They can elaborate in their own interest. This is how I might some might say this is UT or this is not UT. Anyhow, like they follow the schematic. But actually most times you don't have to actually see what you see on the schematic on the wyckoff PDF. Okay, so I have here I have my PSY right here, right? So I have my PSY. Why did I call that PSY? We have an impulsive move, right? From this area, we have an impulsive move. We have a little retracement, another impulse. It's slowed down. Okay, it's slowed down. We have an impulse. We have area of demand that was left behind that broke the high, right? Imbalance. We have this here, pullback, little retracement, pullback, and then we have the breakout structure, right? So this is the buying climax. This is the buying climax. You see, okay, this is the buying climax. And what do we have here? We have ST, we have ST right there, right? It pulled back close to the area of the buying climax, didn't grab liquidity, retraced back a little, and pull back again, right? So this here is my automatic, like my AR, right? Is my AR. Now after that, what happened next? It's still on the range, right? What happened next? You see, take out that buy stops resting here, creating another high. And what is that high? The high is what? An uptrust, right? The high is what? And uptrust, you see. So you should also know that in the wyckoff schematic, accumulation can fail. We can have a fair accumulation. We can also have what again? We can also have a failed distribution price, right? So right here we didn't get to find the U-tag right here, right? So what can you see? You might also think this is also what is it called? A accumulation of price also, right? Because most times you can make mistake in your distribution of price, right? What you think is distribution might be accumulation, right? I might have my UA, what is it called? What is it called? My automatic rally, right? I have my UA, ST, and then I have my spring right there, right? Indicated area of demand. Then we see it break structure, right? See it break structure right there, and right here we can see the area right there acting as resistance, right? So most times you get to see your AR, your automatic rally, acting as what? Acting as what? Has a resistance. That is one thing about the wyckoff accumulation phase. Now, this is a bullish market, right? This is a bullish market. So in a bullish market, you will tend to see the accumulation of price, right? You get to see the accumulation of price. So while you're also studying the wyckoff schematic of accumulation and distribution, you should also get to study about the accumulation and what reaccumulation and redistribution of price. In a downtrend, when you see the market in a downtrend, what do you get to see? In a downtrend, you get to see a redistribution. Like we have a distribution, so then we have redistribution, and we see it sell down again. So here is a simple kind of like a simple schematic you get to find in accumulation and distribution, right? If you find it difficult to study that of the schematic on the wyckoff PDF, right? So this is something you get to see accumulation, right? The price trades down. The price trades down a little range, and then you see it being bullish. Now, right here, the arrow is meant in a way is always meant to act as what? An area of resistance. Okay, an area of resistance. So right here we have a arrow, right? Oh, sorry about that. Right here we have the AR right here after the primary supply, right? After the primary supply, it shows that the bearish market has what come sorry after the selling climax shows that the bearish market has come to an end, right? It slowed down and the institution are doing what? Accumulating price to distribute to the upside, right? So after the selling climax, we have the automatic rally. After the automatic rally, we have what? The secondary test. We have the secondary test. Most times, it's most likely you will see it taking out the selling climax, right? Secondary test. See here, they see it taking out the um, selling climax. After a secondary test, you have it this high taking out the automatic rally known as UA, right? Known as UA. You see trade back down, and we have what ST in phase B, right? We see it have what STB, ST in phase B, right? So after ST in phase B, what do you get to see? You get to see sometimes you get to see this high created before you see it a lower high created breaking structure. Now you see this thing, you might be expecting a structure, right? You're expecting higher high and higher low, and you be like trade the trend. There's some supply here, let's sell if we trace back, but you see it taking you out, right? So this is where you get to know that price is accumulating, because you get to find sometimes the area of supply, area of demand in these areas, right? You see break structure and AR acting as a resistance. It trades down, then take this low, and you see it break the high, the range high, right? So this market here is ranging on this high and this low, right? The high and the low. You see it break the high and you see it going bullish, right? Sometimes you see it test a little and going bullish, right? So that is the accumulation phase. Then on the distribution phase, you get to see a distribution like this AR PSY. Then we see there is the BC. Then you see an ST fail to break the high. You see LC go down. We see the UT take a BC. Then we have the sign of weakness, and then you see UTAD, right? Then you see the market, right? So we have the BC right there. We have the BC. In this case, this you find the distribution phase on a bullish market, right? And again, you find a redistribution phase on the bearish market. So right here we have the buying climax, right? We have the buying climax. We have right there we have ST. Most times we see ST trade above BC. Okay, you see ST trade slightly above BC, right? Then we have the minor sign of weakness right there. Then you get to find what your UT. Get to find your UT above your buying climax. After your UT above your buying climax, you see take out. You see create a major sign of weakness, trades back up again and creates an all-time high. An all-time high. That is why I find the distribution phase where there is an all-time high. So that is my UTAD. Then you see D that move down, break structure, right? Break structure. So what do we look for? We look for retracement for LPSY or for a test, and then you see trade down LPSY, and then the market continue. In the distribution, you see change direction. Okay, you see change direction. So that is how you get to find your wyckoff schematic. Most times, sorry about this. Most times you will get to find a failed what's it called? A failed accumulation of distribution. That is, in this case, you see it. You see this failing to break that high. You see it failed to break structure, and you see trade down. This is a failed accumulation phase. So it has now redistribute price, right? It's a failed accumulation phase that's now redistribute price. So we call this ice. Okay, we call this ice. We call that ice. Okay, same thing here on failed distribution, where you have that test, right? And then it failed to break structure right there. And then you see now trade what? Sorry, you see trade higher. Okay, so that is what? The redistribution of price. Sorry, the reaccumulation of price. Okay, so you wait for your wyckoff to complete. One impulse is what changed the wyckoff schematic. So right here, you can see we have uh, a failed distribution phase, right? If we have the buying climax right here, right, we have the ST right here, we have UT right here. There was no UTAD at this area. You see the market trade back down, right? It broke structure right here, right? It broke structure right here. But what happened? It indicated an area of demand, right? And what do you wait? You wait for a test, right? A test after a break of structure, right? We have UT, there was no UTAD, in which it is here, but possibly you would not get to find the UTAD. But what happened? We have a retest, right? We have it trade high. There was, I think there was no area of supply. Yeah, there was no area of supply, but we didn't have a break of structure. The trade higher failed to break the high. It trades back down to get area of demand, trades back up, right? It failed to break structure. We see it impulsively trade breaking that high, break this high. So now what do we have here? We have a failed distribution phase, and then we have a reaccumulation phase, a reaccumulation wyckoff phase. Okay, so right there I have what? Right there I have my spring. Right there I have my spring. Okay, so don't let the market, wyckoff schematic confuse you a lot. So you have to wait for it to be complete, right? If you check what I explained here, you can see distribution, a failed distribution that turned in accumulation right there. And you see right here, remember I labeled this as PC, ST, UT, failed UT. There was no utility, see break structure, mitigate the area of demand. Failed to break this low here, we see it push back up. What do we call this? We call this area accumulation of price. Okay, we call this area accumulation of price. And what are we going to be seeing here? Right, since we break that structure and there is a spring, we see it has a test, right? What happened? The market trades back down to do what? Test that area, right? They are not turned LPSY. And what happened? We see it trade higher, right? And right here, this consolidation, this was the area of demand that took liquidity, right? So we see mitigate that area right there. See mitigate that area right there. Okay, so after that mitigation, it possibly moved higher, right? It possibly moved higher. And look at that imbalance left behind. It's possibly that the market will try to clear the imbalance, but it didn't bother. So right here, what am I seeing here again? I'm trying to see a wyckoff distribution phase, right? We have PSY, buying climax, ST, liquidity, double top, and equals right there, liquidity, in which the algorithm will tend to grab the liquidity. We have UT, we have lower high, we have that break of structure right there. We have break of market structure, we have that break of structure. Now we're gonna have retest. I see this as a mitigation block right there. Mitigation block. And what am I looking at? I'm looking at this weekly order block right here. Okay, for the price to mitigate. Now, know in mind, this can also be a reaccumulation of price, but have not yet confirmed that because I'm looking at this order block right here, ignoring the imbalance we have here, in which also wanting to see price trade back down there. Alright, as a liquidity void that we have. But this demand is more likely to hold price, right? It can be a reaccumulation of price. Okay, it can be a reaccumulation of price. But if this is fine, AR, there's no area, it didn't hold any price. So it could be a distribution phase. Okay, if we move down to the daily chart, If we move down to the daily chart, we have that break of market structure. The market has turned what? Has turned bearish, right? We have that area of order block here that broke structure. What do we have? Again, we have a shift in market structure. We have a shift in market structure. We have a break of the market structure. Then we have return to the order block. It mitigates that area. We see it sell down, right? This is an area of demand. This is an area of demand, right? A down close candle that did what has an impulsive move up, and we see mitigate area of supply, right? This is order block. Now we see it respect that area a little, but this order block did not break structure. It's not likely to hold price, right? Trace up, then we see break. What am I looking at? I'm seeing this as a breaker block, and you see it right there as a mitigation block. You see right there mitigated area, and it's consolidating. Most likely I would like to see trade right here and go lower. This is where I'm willing to invest if I see my confirmation entry. So to keep the video short, let's move over to the Apple stock. So yeah, same thing seen on the Apple stock. I have my PSY buying climax ST UT, and I have my UTAD right there. I have my UTAD right there. And what am I looking at? I'm looking at a mitigation block also, right? Now this almost looks similar with Tesla, but what happened with Tesla is it failed to create a UT, right? This is my area of supply after the create that all-time high, right? After I create the all-time high, UT break of structure. After the all-time high, we see the market change bearish, trade up to the area. Now what happened? We have a stop hunt right here. Okay, this smart money concept, you can use it. That is the advantage of learning SNC concept and institutional trading. Okay, you see that stop hunt on that high, it grab the buy stops right here, leave it behind an order block. The last buy they did to grab liquidity. You see break structure of that low, return to the order block, expected it, break of market structure. What am I seeing here? Again, we can see an area of order block. Right, is most likely to trade into that area, and I would like to see it sell down. Okay, what am I looking at? Weekly order block. Okay, let's go back to the weekly. Yeah, area of demand right here, weekly order block. Okay, most likely, I don't know if you like to trade lower to that zone right here. So here we also have reaccumulation of price, but keeping the video short, this is my focus, right? This is the focus right here. So we see it change direction, right? Looking at that area, and also I label this mitigation block because I was also looking at this area right there. Okay, so and you see it's respecting, it's following my direction right there. Okay, following the direction right there, and here there is a strong one. So let's see if it's gonna reject that zone and continue selling down, expecting to see if I could buy the Apple stock. So yeah, thanks for watching. Hope you understand this. See you next time.